Are you wondering how you can analyze a stock through easy to understand metrics? Well, today's video is all about that. I'll be sharing with you a free resource and provide a walkthrough of step-by-step how we can analyze the stock of Tesla using this resource for free. Let's get into it. All right, the tool to use here is 𝗖𝐋𝐈𝖖𝐊 all you need to do once you are on the website, you can search for the company that you're interested in. In this case, we are looking for Tesla, which has the symbol TSLA. If you click on that, this page would be loaded. Once you're in the page, you are presented with a number of details. We would like to analyze them and look into them, and I'll provide a quick walkthrough of what you're going to see. First and foremost, you notice a chart in the center of the screen. It provides you a breakdown of the past performance of Tesla stock in different time horizons. For example, the 1 year, if you click on it, you notice it's showing 44.4%. That's how much the shares of Tesla have grown in the past 1 year. If you look at 5 years, it is a massive 1,618.9%. Just incredible return. Look at the different time horizons, let's say 6 months. The stock is up by 18%. You look at the past 1 month, the stock is up by about 11%. The past 5 days, the stock is up by 3%. And at the time of recording this video, the stock market is open and live. Hence, this percentage for 1 day might change as we speak. If you look at the longer term, like 10 years, the stock is showing an incredible 15,000 plus return. Look at the history. You can scroll back to the earlier time horizons and different times. Back in 2014, the stock was close to $51, and all of that based on, of course, any potential stock split that might have happened. Here to the right side of the graph, you notice the 52-week range. That's essentially refers to the past 1 year, how the stock has returned overall in terms of the stock price. The lowest that the stock price has hit in the past 1 year was at $546.98, and the highest was at close to $1,240. It also shows you the range, the price range for today's performance that you notice here. Now, these might be some easy metrics to look at. We're going to talk about a couple of other ones that maybe you're not as familiar with and provide some explanation. The one other thing that you'd like to notice here is the EPS, or earnings per share. The FWD in parentheses suggests that this is the forward earnings per share. What it means, and if you hover over it, you have a definition. This is based on the estimates of analysts, how much analysts estimate that the company would have in earnings per share. The earning per share here of $10.58 is projected for the next year for the stock. So if you scroll down, for instance, there's a section called earnings per share. It's shown by quarter. You notice how the quarters, the past several quarters, the Tesla stock has done. And for example, in the past 4 quarters, you notice the blue bar is showing you the actual earnings per share. And the higher this amount, the more desirable it is. And one thing we want to always compare is what's the actual earnings per share and compared to what was the estimates by analysts. In this case, the past 4 reporting periods, the past 4 quarters, Tesla stock managed to report an actual earnings per share, which was better than that of the analyst estimation. And that's always a good and positive sign. And in many times, the stock reacts positively. The investors react positively when there is a positive beat on the earnings per share. We also want to take a look at the revenue. That's another aspect. So if you notice here how the revenue in annual revenue for Tesla has panned out over the past several years, 2017, if you hover over it, they reported 11.76 billion, grew it almost doubled it to 21.46 billion. 2018, 2019 grew it to 24.6, 2020 31.5, 2021 53.8, and the lighter green ones are actually showing you the estimates, because we are still until 2022. We don't know by the end of the year what would the actual number be, but the estimates by analysts is that the revenue is going to grow to 82.6, and in 2023 the estimate is that it's going to grow to 106.9, or close to $96 billion there, close to $107 billion in total, which is just incredible. If we hover and scroll down, you notice a number of other details. For example, earnings estimate. We talked about that $10.58 earnings per share estimated for 2022. How does this number pan out or estimated for the other years? 2023 is estimated to be at $13.81 and 2024 to $16.28. That's where it's estimated. And if those numbers remain true, that's how the year over year they're showing growth in terms of the increase in their earnings per share. The other thing that you notice is PE, price to earning ratio. Price to earnings ratio is calculated by dividing their current stock price per share by the earnings per share for the trailing 12 months. Trailing 12 months refers to the immediate past 12 months for the stock. Usually the lower this number, it suggests that probably at the time you're paying a lower premium for buying the stock. In this case, 94 may sound quite high for the price to earnings ratio. In fact, if you notice here, the forward price to earnings ratio, that's what we're looking at 2022. It may sound quite high, but it's also worthwhile mentioning that depending on the stock and how much of a at what phase of their growth phase they are, the price to earnings ratio might be perhaps better justified. The one way to look into it is comparing it to that of a sector median, but more importantly also to its own price to earnings ratio over the past several years. We're going to take a look at that through the charting feature in a moment, but keep that in mind while we get there. The other one point that I want to mention to you is the market cap. The market cap for the stock here is at $1 trillion plus, which just suggests how massive of a size this company has in terms of its value. How it is calculated, it is based on the share price for each of its stock shares multiplied by the number of outstanding shares that the company has. There are a number of other details shown here on the overview page, on the summary page, but many of those details are also discussed in subsequent tabs that I will be walking you through it. So maybe we'll wait and we will take a look at them momentarily. Before I move on though, I want to also bring to your attention short interest. Short interest is the percentage of shares float that have been sold short. Usually the higher this number, it suggests that investors overall are more pessimistic about the business. In this case, you can see for Tesla stock, about 3% of their shares are shorted, in a sense that those investors are pessimistic about the stock and they're betting that the stock is actually going to fall. Just to compare things, Tesla is in a consumer discretionary, definitely in automobile industry. We're going to compare it just for the sake of a random example with Poshmark. It is in the same consumer discretionary sector, but totally in a different industry, of course. Here we are talking about, it's a Poshmark is in fact internet and direct marketing retail that offers a social marketplace for new and secondhand style products. But look at their short interest, just for sake of a quick comparison. Here we're looking at 15% short interest, almost 5 times that of Tesla. If you look at it and compare it to, for example, NIO, which is probably a better comparison for Tesla, short interest here is at 5%. Again, the higher this short interest suggests that investors are more pessimistic and are considering that potentially there's a higher potential that the stock would decline in terms of its stock price. All right, going back to our Tesla example, we're going to take a look at the financials tab. You see there's a tab. If you click on it, this is where you can get a lot of details and provide more thorough fundamental analysis from a financial perspective. There are 3 sets of statements provided here. The first one is called income statement. It's bolded. Second one is balance sheet, and then cash flow. For income statement, this is where you get a quick glance into how the company is doing in terms of its revenue, in terms of its expenses, and in terms of its net income. Those are some of the key things you want to watch out for. And the beauty of it here is you notice here by different years how this number is evolving and changing. Keep note that all these numbers are reported in millions of US dollars, just so that they fit better in the tables. In this case, for example, if you look at the revenue, and let's focus on total revenue for the time being, it's bolded. In the year ending in December 2017, the company had $11.7 billion in in actually total revenue. Why $11.7 billion? Because remember, these numbers are reported in $1 million. You're looking at 11,759. If you multiply that, you get $11.7 billion in your total revenue. How this total revenue is growing, you noticed, and we talked a little bit about that, right? We saw it through the bar chart graph that I showed you earlier on. That's one thing for you to remember. And trailing 12 months is also shown here, the TTM. Now, that's an important aspect to keep in mind. The revenue itself is amazing, but it's probably not as of a great thing if the company is just losing all of its revenue because of the high cost that it has, which is why it's important for us to look at a number of other things. You could, for example, take a look at operating income, but more importantly for us, we would like to take a look at the net income. That's truly where it shows, is the company loss making or is it profit making? In this case, you notice up until the end of the year 2019, Tesla was loss making. In fact, in the year ending in December 2019, they had reported $862 million in loss. But from there on, the company switched things around and they're profit making from $721 million in profit in the year 2020 to the year 2021, where their profit is $5.5 billion. Definitely, they've turned things around quite extensively there. You also notice a number of other things. For example, earnings per share. We talked about that. You can see the diluted earnings per share, some other details there. You'd also can find here within the income statement, what is your number of outstanding shares. For example, if you look at it, the basic weighted average shares outstanding here. You also have diluted weighted average shares outstanding. Very similar in numbers. You're looking at $830 million in 2017, all the way to now closer to 986 million based on the basic, 1.1 billion outstanding shares according to the diluted average shares outstanding. With that, let's move on to balance sheet. Balance sheet is where you can take a look at how much debt a company has, how much kind of asset it has, and whether it's showing a healthy balance sheet. Obviously, the way to assess that is ideally, we would like to see a company that has more assets than what it's in terms of its debts. That's where you take a look at here quickly. You can take a look at their current assets. Current assets refers to the set of assets for the company that are much more easily convertible to cash. So they are cash or cash equivalent for the most part. In this case, the company has steadily grown its total current assets. That's always a positive sign, and we want to always. This is always something good for us to see. You see, for example, from 6.5 billion to here 8.3 billion to 12.1 billion to 26.7 to finally in the year ending December 2021, they had $27.1 billion in current assets. Now, that's total current assets. We want to also take a look at total assets. The total assets for the company includes some of the more of a longer term asset. These are things that are not immediately convertible to cash, but it could be, for example, some sort of their equipment. It could be some of their, for example, properties and other long-term assets that they have. In this case, the total assets for the business, which consists of both their current and their long-term assets, comes to a total of $62.1 billion in the year ending in 2021. We want to compare these numbers, the total current assets, as well as the total assets, respectively, to that of total current liabilities, which is here, and the company's total liabilities, which is here. So total current liabilities and total liabilities. For example, quickly comparing these two numbers, the total current liability was at 19.7, whereas their total current asset was at 27.1. The total current asset is much more than their current liabilities, total current liabilities. So that's positive. It gives them a positive current ratio. In other words, whenever your current asset is more than your current liabilities, that's always positive. Because what it suggests is that the company has enough cash or cash equivalent to be able to pay for any of their current liabilities. The other one is we want to compare their total liabilities, in this case, only at $30.5 billion compared to their total assets, which is at $62.1 billion. Again, almost half of that of their total assets, which is quite desirable. That's your balance sheet. Lastly, if you look at the cash flow, as the name suggests, it suggests how much cash is kind of coming in and how much cash is going out. You also notice what are the sources of those cash flow. For example, cash from operations is another metrics that you want to take a look at. Ideally, we'd like to see this number consistently growing and being positive. Appears to be the case from the year over year. You also have some cash from operation, from investing, which is, while it is valuable, it is not necessarily the main thing that we are bothered about for this business, because Tesla is not in the business of investing, but rather in the business of producing cars and applying their technologies. That's why the cash from operations is much more important for us. We're going to take a look at the evaluation tab. Here, some of the items are kind of hidden in terms of the grading and how 𝗖𝐋𝐈𝐖 assesses the current status of the valuation for the different stocks, but it at least does give you some notions of details. Like, for example, you notice how for these different metrics, Tesla stock is doing in this case compared to that of the sector median. By sector, we're talking about the consumer discretionary sector. In this case, if you look at the forward price to earnings ratio non-GAAP at 94.91 and compare it to the sector median, which is only at 12.34, your immediate reaction could be that Tesla stock is definitely traded at much higher premium than that of the sector median. So you're quite paying a hefty price for that, almost 669% higher than that of the sector median. But again, that's one metric to keep in mind. There might be some reasoning behind why the Tesla stock is being traded at such high multiple. One of the reasons is really it is growing quite fast. It is really knocked it out of the park when it comes to some of their profitability metrics that we're going to take a look at momentarily as well. A number of other things that I usually look into it is price to sales. For example, what's their price to sales forward metrics? In this case, for Tesla is at 12.55 multiple, which is again much higher than 0.93 for sector median. Again, suggesting that you are paying already quite a premium price for getting your hands on Tesla stock. Price to book value, you're again seeing a huge difference here, 34.36 multiple versus only 2.34 for the sector. The Tesla stock is definitely at its current price, has a high premium built into it in terms of the price to book trading 12 months. Similar story for price to cash flow and a number of others that you can notice here. And the beauty of 𝗖𝐋𝐈𝐖 is as you hover over different metrics, for the most part, they have the definitions built in and you can easily compare and take a look at it. As promised, we're going to take a look at profitability. Here also is an opportunity for you to see why maybe some of those high prices that you're seeing are the case. In this case, if you look at, for example, the gross profit margin trading 12 months, for Tesla stock, the gross profit margin is at 25.28%, which is lower than the sector median. So this is not ideal. Ideally, you want to see a higher gross profit margin. That's why the 𝗖𝐋𝐈𝐼 is giving it the D+. But there are many others that they are knocking it out of the park. For example, if we look at the leverage free cash flow margin trailing 12 months, the trailing 12 months return on leverage free cash flow, which measures the company's profitability as it exhibits the amount of cash it has after it has met its financial obligations, they're almost double in terms of the percentage compared to that of the sector median at 8.6 compared to 4.7, which is 80% higher or better than that of the sector. The other aspect that you're doing quite well at is their capex to sales trading 12 months, which is a measure of companies' investments per sales dollar, and it's calculated as a capital expenditure divided by sales. Here, they're showing 14.8% compared to only 2.64% for sector median, which is 464% better than that of the sector. So some of those profitability measures and metrics are located here for you to take a look at. If you look at the momentum tab, that's where we're not talking about our channel Momentum Finance, but more so around the stock momentum, how the stock has done in the past 3, 6, 9 months, as well as the past 1 year. and how is it doing compared to the sector median. There's also a comparison to their own 5-year average during those time frames. Really some neat numbers for you to look at. For example, if you look at the 3 months performance for the stock, although the Tesla stock was down by 2.54%, it is much better than the sector median of negative 12.7%. But their 5-year average was showing to be 21.30%. You also have a comparison to S&P 500 over the longer time horizon. For instance, S&P 500 in the 10-year time frame returned a cumulative return of 217% compared to Tesla stock, which had a massive 15,274% return. That's really where you see the beauty of identifying a high quality growth stocks that really knocks it out of the park. If you scroll down, you can see some details around moving averages, including simple moving averages and the 10-day moving averages, 50-day moving averages, 100-day moving averages, and 200-day moving averages. Some look into a more of a technical aspects of analysis. You have in details for the relative strengths as well. Some details provided here for you from an RSI perspective. If you hover over the peers tab, you notice some of the peer companies to Tesla, including Toyota, Mercedes-Benz, Ford, General Motors, and Stellantis that are listed here, and some kind of through a tabular format, you can compare them quickly to each other. What's their market cap? What's their enterprise value? Number of employees? How many analysts are covering the stock through the Seeking Alpha as well as Wall Street. Some sections are locked, but you also notice some details around the stock trading prices, the 52-week range, as well as how the stock is currently doing compared to its 52-week range. For example, the last closing price for Tesla as of the last trading day, if you take that, the stock is currently close to 19% below that highest price that it has had in the past 1 year when you compare its current price to it. That's one thing to keep in mind. You can compare them next to each other. For Ford, it's much more wider. They're actually at their last closing price, they are 40% below what their 52-week high price was at. You have total returns over the different time spans. Really, Tesla stands out from the rest of the bunch here when you compare them together. Tesla does not pay a dividend. That's why you don't have those details. But for Ford, you see some of these details. And some additional details that you can scroll over and take a look at. It's kind of head-to-head in comparison of different peers to that of Tesla. Lastly, to wrap up the video, I want to also take a look at the charting feature, where it has a number of metrics built in for you. The default one is price return, that similar to the one that we saw earlier, comparing the stock price return to that of S&P 500. But the number of other ones that I'm quite interested in includes, let's say, the price to book value. And why to me it's interesting is because I think it provides a bit of a longer term view. How this Tesla stock, for example, has done from a price to book value ratio. Although it is currently sitting at 247, if you look at that of its different time horizon, you can see, for example, at what back in March, about probably a month or 2 months ago, it went as low as 165. That's definitely quite interesting. But years before, when the stock still was at much lower prices, this was at much lower ranges. I'm also going to take a look at the price to earnings gap trailing 12 months to see how this number has changed. Back in early January of 2021, we were looking at a super high, hefty multiple of close to 1,300 or 1,400, whereas now it is, as we talked about, hovering closer to the 204 for trailing 12 months. For the forward ones, as we talked about, it's even better at only 94. So definitely it's coming down from what it used to be, during the past at least let's say 2 years or 3 years. A number of other metrics built in. You can definitely feel free to look into them. For example, net income trailing 12 months, how the net income for Tesla as a business is shaping out, and all of those details. And of course, one bonus piece to add, if you hover over the earnings tab, it gives you their quick review of the last quarter earnings. How did they do in terms of their earnings per share, in terms of their revenue? Did they beat their estimates or not? And also some estimates and view for the upcoming earnings and what the date would be. The announcement date for that would be on the April 20th post-market. That's when they are going to announce their latest earnings, just in a matter of day. And you notice here what's their revisions in the past 90 days done by analysts to the estimated earnings per share. So 11 analysts have increased their estimate that for earnings per share, and 5 of them have decreased it. The estimate for GAAP earnings per share is at $1.85, but the normalized estimate is at $2.27. We'll have to wait and see how this number pans out. And if you scroll down, you notice some bar charts that nicely shows you some of those consensus, as well as some of the actual earnings per share by quarter, and some additional details that you'd see even going back all the way to multiple different quarters, how the company actually did, whether they beat or missed the estimates, by how much, and how about for revenue, both for earnings and revenue, how they did. It really gives you a quick view of their past history. Well, there you have it, folks. A quick look into a free tool, as I talked about, 𝗖𝐋𝐈𝐖𝐊, that allows you to do a deep dive into any stock that is traded in US dollars, whether it's through NASDAQ or New York Stock Exchange, and really do your analysis. We try to provide you a walkthrough of some various key examples, walk you through different tabs within this tool, and some of the key things that we look into. There might be other metrics that you might also want to take a look at and really investigate. Let us know if you've used this tool in the past, and if there is any specific financial metrics that typically you look into when it comes to analyzing a stock and assessing where a stock is, whether you want to buy it or just add it to simply your watch list, perhaps even sell it. I'd love to hear from you. As always, if you enjoyed this video and gained something of value from it, please give this video a thumbs up and share it with someone else who might benefit from it as well. Of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks. We also talk about cryptocurrency, as well as discussing ways to analyze stocks and ways to reach financial freedom. Thank you, and I hope to see you next time.